Wonderful good afternoon, ladies and gentlemen, and welcome to Wednesday afternoon time. It's Marcus time, and I'm really happy that you're here because today we want to talk about trade with a stochastic oscillator and how we can use it. And we have some different topics. It's more practical time today. So first of all, let's talk about what is basically the stochastic oscillator, indicator oscillator. So what does it tell us, this oscillator, and some examples how we can use it, and also the limitations of this stochastic oscillator. I hope you can make sure that you stay until the end of this webinar, or maybe the end of the video later on YouTube, when I'll be showing you why this oscillator is a very popular momentum indicator and oscillator and how we can use it properly. So my name is Markus Gabel, if you are the first time here, and I'm a professional analyst, speaker, trader, and life coach of sure, and I love to trade. And yes, more than 22 years right now. Oh my God, it's 22 years. And if you want to have more information, there's my homepage. You can see tradingandpersonality.com. There is a special there's a special reason why I call it tradingandpersonality.com. So this is by not by accident. This is a special reason, because personality is the most important thing in trading. In this webinar series, I'm partnering with Admiral Markets. This is Trading Spotlight. This is our session. And Admiral Markets is a Forex and CFD broker that offers trading over 8,000 different financial instruments through one of the world's best trading platforms, MetaTrader 5, but as well MetaTrader 4. So finally, if you're watching this on YouTube, remember to like this video, share it with other traders. If you have some people around you, they want to learn trading, invite them to this Trading Spotlight community, and subscribe the channel of Admiral Markets, which you will find in the chat from my wonderful host. Thanks, Roman Foe, for supporting me in this webinar. So if you subscribe us, then you will never miss an episode. Okay, that's for the official introduction. And now let's talk about the oscillator. And by the way, guys, this is your webinar. If you have any questions, something else, then where is it? Then type it in the chat box. We want to have a communication. And if you have any question, let me know. And I will ask you maybe in between something questions, so we can have a lovely and human community and human conversation. So this guy you can see in the slide, this is Mr. Lane, George Lane. Unfortunately, actually he's dead, but the stochastic oscillator, he was developed in the 1950s by Mr. George Lane. And this oscillator presents the location of the closing price of a special security in relation to the high and low range of the price of a security over a period of time, typically 14-day periods. Mr. Lane, over the course of numerous interviews, has said that the stochastic oscillator does not follow price or volume or anything else. So what does it tell us? This we should try to figure out. So Ronald, wonderful, good afternoon. Ovidus, good afternoon. And Amelka, I guess this is the right name. Let me see. Amilcar, yes, wonderful. Good afternoon too. So let's go on, because we want to focus a little bit on the practical parts today. Claudia, lovely greetings to Colombia. Nice to meet you again here. So Mr. Lane indicates that this oscillator follows the speeds or the momentum of price. So here we go. You know, I love the special words in my slides, because if I develop and if I prepare the slides for you, then I always think about, before I make this webinar, how can I help my followers? how can I help you that you become successful in trading? Vamos, Mario. Thanks for being here with me. So, and therefore I will give you all the special information. And my webinars a little bit different from all the other webinars, maybe, because I try to dive in very, very deeply in knowledge. So, because I guess my understanding of trading is that the deeper your understanding, the more you can understand why why markets are reacting in special ways. And one of the worst thing ever is if you lose money. So this is my sentence: losing money is not funny, especially if you don't know why you lose your money. And that's the point. The deeper you have, the deeper you understand, the more you can understand why your trades are successful and some things sometimes they are not successful. And it's the worst thing ever if you lose money and you don't know why, if you cannot explain. And as a human being, it's really difficult because we used to think in the same way. We learn something, we do the same always, we get the same result every day with our job, with relationships, and special advice: never fight against the trend, and more important, never fight against your girlfriend. Never. You will lose the game. Believe me, you will lose it on the whole way at all. So that's rules of our life. But the deeper you understand why you shouldn't do it or why you should do it, then the better you can understand how the market is working. So, and one of the special words is always the price. And one of the real deep understanding is that most of the times we are focused on the completely wrong things. So let me ask you something. Type in the chat box: do you trade gold? So what is your preferred security you trade? Type in the chat box. What do you love to trade? DAX, gold, silver, oil, something else? Yes, FX is a whole field. It's a really large field. FX, gold. Amalka is trading gold. Great. I'm trading it now. Okay. Currency pairs mainly. Great. Wonderful. So I have a brutal truth for you. I opened a buy for it a few days ago. Oh, a buy for gold. Oh, Jesus Christ. Are you sure that you know what you're doing there? Okay. So I have a brutal truth for you. Listen to me. Maybe it's time to take the pen and the paper and write it down, what I tried to tell you, because this is more maybe special point for coachings normally. But you don't trade gold. Bad news for you. You don't trade gold. And you don't trade the main pairs. Sorry, that's the brutal truth. Maybe you asked, what is talking about? Okay, that's the brutal truth, guys, is you trade the price. That's all. Gold is just only the label. It's just only the name. So why do you have to pay so much more money for a Gucci clothes or whatever? What is it? And you can go to the next store to get a cheap bag, but you can also buy a bag from Gucci. So ask your girlfriend which shoes are more important, from next store or from Gucci or whatever. Jessica Parker, for example. So why? You have to pay the name. That's all. But in trading, the point is, this is really deep knowledge, guys. And this is related to the stochastic oscillator, because we are focusing on the wrong things. But if you are focused on gold, that's the name. But with a name, you have an opinion. Gold is strong, gold is safe haven, whatever. So you have an opinion to something else. So, and it's always the same if you think about a special name. If you think about the name of your president of your country, you have an opinion. Even you don't know that guy or this woman, but you have an opinion influenced from outside. So, do you know the real huge guys? They are really traded gold. Do you know them? I don't know them. I don't know them. And that's one of the facts. You're focused on the wrong things, and then you are already very close for having an opinion instead of trading your strategies. Because finally, in the book map, you don't find this name. What do you find there? Just only the price. And it doesn't care if you think it's a good price for you now. You have to figure out it's a good price for the big guys, for the elephants in the market, not for you. You are the mouse. So try to fight as a mouse to the elephants in the nature, not in a zoo, in the nature. Do you really think you can win this game or this fight? Try it. Maybe one time. Yeah, but if you see the elephant will tell you, then it's fine. So the point is, switch your focus from the name to the price. And then you have to think about the point that in Bookmap or the order book, just only buyers and sellers. And you don't know one single buyer or seller. You don't know them. Completely neutral thing in Bookmap. So why you should have an opinion about something else, like FX or Euro or gold or something else. And such kind of an oscillator, it is what it is. It's just an indication of the price. So you see, it's a completely overlooked points. You can use it for every special price. Doesn't matter if the price has a name of gold or silver or oil or Markus or whatever. Just an indication. This is just, by the way, for your deeper knowledge. And by the way, the consequence of this is, if you don't focus on the name, you have less emotions because you don't have an opinion. If you focus on the price, there's only one question. Because you know, if you want to make money in the market, you have to buy cheap and you have to sell expensive. This is the only chance you can make money. Or maybe in the opposite direction, the same. And if you focused on price, there is no reason for having emotions. Why you should have emotion by the price? Because the price is, it's either cheap or normal or expensive. That's all. Doesn't matter which label is named on this chart. So switch your focus from the name to the price, and your emotions will be less. Maybe not completely away, but really less. So maybe think about it a little bit. Think about it. I hope it's valuable for you that I told you, that I tell you this really deep knowledge. Normally, I train my students in this way, not in official webinars. But today, I love you guys, and I really appreciate it that you spend your lifetime with me this afternoon. So this is just a piece of deep knowledge. Okay, Mr. Lane also reveals in interviews that as a rule, next wonderful word, rule, the momentum or speed of the price of a stock exchange or maybe other securities before the price changes itself. It's a little bit an indication of, it's more than a prediction for the future, but be careful. It's not the holy grail, guys. And there doesn't exist a completely true prediction to the future. It's just Probabilities. Write it down, special word. Trading is a big game of probabilities. No safeties, no guarantees, just only probabilities. And if you want to win this game of probabilities on the long run, you have to train and you have to be educated in trading. And being a part of this webinar series, Trading Spotlight, or maybe being a part of, how should I say, our Trading Spotlight community. And believe me, we have great developments next year for you. Really, you should be a part of this trading community, and you should invite your friends that want to train, they want to have a better life. You can have it with trading if you are willing to do the job. And it is a job, it's work, it's like a craft, you know, it's like a craft. You have to learn it, you have to do it every day, or maybe every week, whatever. Not every must be a day trader. It's enough to be a swing trader, of course. Then you can really earn money with trading. But you have to train, you have to be educated, and at the best, take a teacher for yourself, a private teacher who can teach you privately, who is bringing you as person into the middle of the attention. So this is my private opinion about how you can learn trading at the best in a really short way. Otherwise, you have to invest a lot of money and you have to invest a lot of lifetime. And unfortunately, guys, our lifetime is very limited, really, really very limited. So spend it really wisely. And being a part of this wonderful webinar series of markets and Trading Spotlight is the first step into a great, great future as a human being and of course as a trader. So you see the row, the number, first human being and then trader, not trader and then human being, always human being and then trader. Please be careful about that. So 2 words, rules and price. Price, bring emotions away, and rules, let's focus on what we have to do. Rules means you have to do a job every single day, or maybe every single trade. In this way, the stochastic oscillator can be used to foreshadow reversals when the indicator reveals bullish or bearish divergences. Wonderful word. You should remember it. Maybe type it down. A signal is the first and arguably the most important trading signal Mr. Lane identified. And yes, we want to dive into the market, how we can use it. So basically, what is a stochastic is? Don't forget to drink, guys. It's really important. And sometimes if you have time, because guys, it's Christmas time. That's chocolate. I need it. You know, if you have a stress, take a chocolate. Okay, let me invite you to a chocolate this afternoon. Come on, it's Christmas time. Forget the kilograms. It's Christmas time. So just kidding, guys. Eat fruits and vegetables and make sports. Okay, we have big problems right now in Germany. All sports stations are closed. We are full lockdown in Germany and I hate it. Okay, we need it, of course. People are so stupid in Germany. They don't follow the rules. And it's to my bad thing. I cannot go to my gym and I'm really addicted to sports because I was more than 15 years a bodybuilder, and I know what I know what it means to follow rules and to feel pain, to progress to yourself, to become really strong. And your mind is a muscle as well. And this muscle you need for trading. So you have to train your trading mindset. So take it like a muscle. And the more you train every day, the better it is. And the more you become stronger and stronger. And on the long run, you can win this game of probabilities. So what is a stochastic in the oscillator, basically? It's a momentum indicator comparing a particular closing price. Again, you listen, price of a security to a range of its prices over a certain period of time. The sensitivity of this oscillator to market momentums is reducible by adjusting that time period or by taking a moving average of a result. So it's used to generate overbought and oversold trading signals, utilizing between 0 and 100 bounded range of values. So special words, you have a very good professionist bodybuilder, Markus Rule. I don't know. So special words we have to focus. So price, always we are focused on the price, not on the label, price. And then we have this overbought and oversold points. So we have to focus on these things. So what does this stochastic oscillator tell you? It's a range-bound oscillator, and its ranges are oscillating between 0 and 100 or 0 and 100. And this is a really useful indicator to see if a price, and here we go, a label can never be oversold or overbought. Yes, a thing like toilet paper, yes, it could be overbought or oversold, but never the company. Yes, the price of Tesla can be overbought or oversold, but never ever Tesla at itself. Think it through by yourself. Maybe you close your eyes a little bit and think it through. The label never can be oversold or overbought. It's just always the price. So why you should focus on the label, where you're always in danger to be influenced by opinions and news and all this bullshit, what never should care about you. So focus on the price. Traditionally, readings over 80 are considered in the overbought range, and readings under 20 are considered oversold. However, these are not always indicative of impending reversal. Very strong trends can maintain overbought or oversold conditions for an extended period. Repeat, please. It's really very important. Later in the chart, I will show you why. However, these are not always indicative of impending reversals. Very strong trends can maintain overbought, oversold conditions for an extended period. There's a special word in it. So we figured out already, price is important. We have the word divergence. We have overbought and oversold, which is related to the price. And now we have another special word, which is, which word? So type in the chat box. What do you mean? Which word is the most important word in this sentence? What do you think? However, these are not always in this sentence. Which is the most important word in this sentence? Type in the chat box. Type in the chat box. Come on, guys. If you listen to me, you will know it. And if you know me, then you will know it. So which is the most important word? Ronald, I love you. You're really right. But I guess the other guys are fighting with it. Okay. Just a sec. Come on, guys. Which is the most important word in the sentence? I repeat it again, maybe well, we will realize it. However, these are not always indicative of impending reversal. Very strong trends can maintain overbought, oversold conditions for an extended period. So which is the most important word? Type it in the chat box, please, right now. Which is the most important word? I will give you a chocolate. Ronald, I have a chocolate for you. So which is the most important word? America, great. Yeah. Period is period. It's not, unfortunately, but I have a chocolate for you. Yes, of course, it's the word trend. Why is this so important, guys? Tendencia, Claudia, trend. But it's okay. I guess you mean the right word. So it's the trends. Why is the trend so important? Because the trend is directly related to the price. Because people and traders are trading the price. If you have more buyers, which they have more volume on the buyer side than on the seller side, the price will go up. If you have more volume on the seller side than on the buyer side, the price will go down. And this consistently change of buyers and sellers, more stronger buyers, more stronger sellers, will lead to movement and corrections, natural behavior. That's all. And at the end, you will see what? You will see the trend. But at the beginning, there's the price. Price and trend are related directly to each other, of course. So you see, we have different, very interesting words. So you can combine it, and I will train you a little bit in this round 45 minutes to train you to focus on the right things, and then you will have a really big chance to become successful with this lovely broker Admiral Markets. And we will train you more and more and more. I hope you can understand what I try to explain with my German English words. So last sentence on this slide, instead, traders should look to change in the stochastic oscillator for clues about, what's the word? Future trend shifts again. So where should be our focus? On the oscillator or on the price and following trend? What do you think? Where should be your focus? Type in the chat box. Where should be your focus? On the oscillator or price and trend? What do you think? Type in the chat box. What's more important? The oscillator, which is just an indication of what? Yes, what? What is more important? Yes, Grace, Claudia, wonderful. I guess I learned Spanish with you, right? Precio, I guess. So, two words are more important than the indicator or the oscillator: price and trend. So, do you know why? What was first? Special question for you. What was first? The egg or the chicken? What was created by our Lord first? The chicken or the egg? What do you think? What was the first one? Was created by our Lord or the Creator? What was first? The egg or the chicken? Okay, we have different opinions. I see. Roman, what do you think? What was first? The chicken or the egg? What was first? Yes, God created animals. Yeah, if you think to our Lord and if you are a believer to God, then you know, okay, He creates everything. So first the chicken and then the egg. But this is a fight between believers. If you believe to evolution, which is just only a theory, of course, then maybe you should think, okay, the egg was the first one, but there is no proof, there is no evidence. Sorry, there is no evidence. But if you're a believer to God, then you think, okay, God creates the animals. Then the chicken was first. Okay, this is a fight of believers. But if we ask, what was first, the price or the oscillator? The answer is really clear. If you follow my thoughts, you know the answer. What was first, the price or the oscillator? What was first? Type in the chat box right now. What was first, price or oscillator? What was the first thing? Yeah, right. Absolutely. Chocolate for all of us, guys. Oh, just only 4 left. Okay, God. I have to buy a new one. Yeah, and price is God. Yes, the price is God. Of course. Yes, why? The oscillator is a mathematic thing which is calculated by the price. So no price, no oscillator. No price, no trading. So why should you be focused too much on the oscillator if you can read it by yourself with knowing the price? I guess think it through a little bit. No price, no chocolate. Roland, of course, no price, no chocolate. That's true. So let's go a step further. Stochastic oscillator charting generally consists of 2 lines. So one reflecting the actual value of the oscillator for each session, and one reflecting its 3-day simple moving average. But you should use the settings which is general in this oscillator. I will show you. Take special numbers. So because price is thought to follow momentum, intersections of these 2 lines is considered to be a signal that a reversal may be in the works, as it indicates a large shift in momentum from day to day. So again, you can see it again. The most important word here is price. And this is what you can remain and what you can remember after this webinar. There is basically no indicator which will tell you the ultimate truth. We cannot predict the future. It is what it is. A stochastic, this is called oscillator, because the figures oscillating about the price, but no price, no chocolate. Oh, no price, no oscillator. Okay, chocolate is confusing me right now. So oscillator is just an indication what you can see in the chart. So divergence between the stochastic oscillator and trending price action is also seen as a really important reversal signal. And with this in our mind, we can create a wonderful and lovely strategy. So for example, when a bearish trend down, bearish down, when the bearish trend reaches a new lower low, but the indicator or the oscillator prints a higher low, it may be an indicator that bears are exhausting their momentum and a bullish reversal is brewing. Again, let's repeat. When a bearish trend reaches a new lower low, but the oscillator prints a higher low, it may be an indicator that bears are exhausted or exhausting their momentum and a bullish reversal is brewing. I guess I can draw it for you that you can realize it a little bit better. Okay, here we go. So just this one. So we have a trend. You see, maybe this is a trend. It's a bear trend, bearish trend. It goes down and down and down. And you see, the lower the price is going, the more exhausting is the price. So, and now you have this one. So, and on the lower side, you have your oscillator. Up is 80 and down is 20. So now you have your oscillator. It goes up and down and up and down and up and down. So now it goes down. So with this low, you have this low, and then it goes up again, and the oscillator goes down, but you have a lower low, but a higher low in the oscillator. And this is what we call a divergence between the price and the oscillator. And because this oscillator gives you indication if the price is exhausting and the reversal is brewing. So this is a wonderful, very, very simple strategy. But the warning word, it's not the Holy Grail. It's just a strategy. It's a really high probability, especially if you use it maybe as a signal for higher time frames. If you use this divergence, maybe in hourly chart, and you can trade it in 5-minute chart, and you will see there a trend. Or maybe you use it in that time frame where it occurs. So maybe you see the divergence between the oscillator and the price, maybe in 4-hourly chart, and you can trade it there. This is a wonderful strategy, which is very successful on a long run. Not every time. And by the way, I shouldn't mention it that you have to use a stop loss, of course. And a stop loss is not a personal punishment. It's just the stop loss should protect the idea and not your money. It is a revolutionary idea, but think it through. A stop loss should protect the trading idea and not your accounts. Money management is protecting your money. Stop loss should protect your trading idea. So let's go. This examples. The stochastic oscillator is including in MetaTrader 5 and 4, of course. Standard time is 14 days, but you can use whatever you want. And I show you special numbers right now. How is it developed? It's calculated by subtracting the low for the period from the current closing price, dividing by the total range for the period, multiplying by 100. So by comparing current price to range over time, the stochastic oscillator reflects the consistency with which price closes near its recent high or low. So a reading of 80 would indicate that the asset is on the verge of being overbought. Okay, so now let's jump into the markets, and I prepared it for you. Let me guess, your first view, the first glance, when I opened the chart, let me guess, was on the label, right? Come on, be open, come on, be frankly. How many of you looked at first at the label? I would do that. I would do that. It's a normal thing. Really, it's a normal thing. So now you can see I add the stochastic oscillator from the MetaTrader here. So now what we have here right now. So first of all, let's see how a divergence is working. So you see, oh, the candles, great, I love it. So look at this one. We have a lower low, a little bit bigger. We have a lower low. But you can see, here we go. We have a higher low in the oscillator. So, and by the way, you see there was a high, lower low, lower low. But you can see the indicators starts here, higher low, higher low. And finally, you can see it was the reversal. And afterwards, the price goes up and up and up and up and up and so on and so on. And at the end, what you can see, yeah, guys, it's a trend. That's all. It's a trend. It's still valid, the trend. It's still valid. Don't never limitate your thinking how far the price can go. This is a really bad thing of traders, because traders are used to limitate their self if they are thinking on the right side of the chart and they're focused on the right side and they say, oh, the price cannot go higher. This is limitation in your mind, because the price always can go higher. He doesn't care about your limitation in your mind. Bring out your limitations in your mind. Everything can happen. Did we ever thought about, did you ever think that we have coronavirus, a pandemic? I didn't. I couldn't imagine that we have a worldwide lockdown and the economy is for bullshit right now. Okay, this is kind of divergence. So let's go a little bit higher, but as you can see, it's not an indication all the time that we have a complete reversal. So look at this one. If you think, let's do it in that way. So here we go. Maybe, here we go. That's the first time on the right side of the chart. So now maybe you think, okay, this is a high. Here is a high. And here is the overbought situation. Okay, you could see we have it on the lower side. Here we go. Divergent, the price goes up. And now if you think on the other side must happen the same thing, then you're completely wrong. You have to wait. If you have divergences, or maybe if you have a trend, that's all. But as you can see, the price remains on a high level. Even the price comes down to an oversold situation. But look, the price was there or there, but never there. You see, that's the deceptive truth. It's not the ultimate truth. And at the end, and at the end, you should use this really properly. So take a little bit higher. And here we go. Same situation. So wonderful, wonderful situation. So look at this one. Just a moment. Here we go. Yeah. Here we go. It was March, of course. So let's see. Here we go. So you see, that's the evidence again. You have lower lows in the price. The momentum is exhausted. And you see we have a double low or a little bit higher low, but not a lower low in the indicator. And as a consequence, at the end of a really major or old trend, really old trend, then you have a wonderful divergence. And this is a sign for a big reversal. And in the end, you can trade the trend at all. And this is the only way which makes sense to use such an indicator. It's really, really simple to use it. But we have, last words, limitations of the oscillator. Sometimes it produces false signals, as I showed you on the upper side. Don't take it as a reliable indicator. It is a reliable indicator, but it is not the ultimate truth. If we would have an ultimate truth, everybody would see the same. But then we couldn't trade, of course. Why it produces false signals? This is when a trading signal is generated by the indicator, yet the price does not actually follow through, which can end up as a losing trade. Of course, during volatile markets, like we have right now, conditions, this can happen quite regularly. And one way to help with this is to take the price trend as a filter, where signals are only taken if they are in the same direction as the trend. Here you see, focus, guys, on trend and price. This is what I have to say in this way. So let's have a quick conclusion. A stochastic oscillator it's dark. Jesus Christ. A stochastic oscillator is a popular technical indicator for generating overbought and oversold signals, developed in 1950s, and you can use it for every price history, and you can use it for really interesting divergence. And this is what you can maybe learn with this session. Guys, let me invite you to our wonderful Trading Spotlight community. We have more than 200 participants at the moment, and Paul, Jens, and myself, we will share our trading ideas in this Trading Spotlight community. There's only one requirement: to open a real account, put some little deposit on it, and follow the ideas from Jens, Paul, and myself. On Friday, in 2 days from now, my congenius partner, Jens Klatt, is talking about the own topic, Santa Claus rally. Santa Claus rally, what is it? And graphically, and how you understand it, and the pros and cons. Friday, same time, same place. And I want to say thank you, guys. I know my webinar is a little bit different, but I want that you learn something. And if you want to learn something more, then please take a private teacher and follow the advices from Admiral Markets, all the webinars, the YouTube videos, and so on admiralmarkets.com. And thanks, guys, again. That was Wednesday afternoon. That was Marcus time. I wish you a wonderful, lovely week, rest of the week. And I hope we will see each other in the community or on my Facebook or my channels, social channels, or maybe next weeks. I hope we will see each other very, very soon. Stay healthy, take care for yourself, and always be careful about your thoughts, because they are the beginning of your actions. See you. Bye-bye.